Howdy to our California tax preparers. This is an addendum to our Update Extravaganza video. To see the main video concerning federal tax, you can click the button here. Or if you are taking our California course, it will be included in one of your tax update hours. First off, as we mentioned in our other video, don't forget that qualifying widowers are now called qualifying surviving spouses on your California returns. All the forms will reflect this. Additionally, in California, your tax clients may have received a debit card or a check for the middle class tax refund. This refund has ranged from $200 to $1,050 depending on status and was given to most Californians who made less than $250,000. Individuals who received a tax refund of $600 or more received a 2022 1099 MISC. The MCTR payment is not taxable by California, and your clients do not need to claim the payment as income on their California income tax return. Additionally, the IRS has delivered guidance on state tax payments that they do not require you to report the MCTR payments on your federal return either. They will not challenge that for the 2022 tax year. There's a link to the IRS guidance below. Okay, more big news for California. Most of the state's counties were declared disaster zones due to the flooding and heavy snows that we received in our recent winter storms. Because of this, most taxpayers in California have until October 16th, 2023 to file both their income tax returns and to pay tax and estimate payments that were due in January and April. This is for California and the feds. Alas, those living in Lassen, Modoc, and Shasta counties were not part of the disaster declaration, and they will have normal due dates. But all the other counties in California have the extended date. Be sure to advise your clients that the disaster extension does not give them amnesty. They still have to pay all of their taxes and estimates. They just have more time to do so. Many of your clients will prefer to pay at the usual time in order to avoid being blindsided by huge tax payments that they weren't expecting later in the year. So maybe this is moot since it's April 18th and many folks have already paid. In other California news, the College Access Act has been extended through 2028. This means that the planned phase-outs of the credit for the next few years will not take place after all, and taxpayers can still receive a state tax credit equal to 50% of all cash contributions made to the state's College Access Tax Fund. The fund is used to provide Cal Grants to low-income college students. Okay. The final big California change is that Senate Bill 113 was signed by Governor Newsom on February 9th, 2022. This bill reinstates the net operating loss deduction and also removes the annual limit of $5 million on business incentive tax credits. These changes will be effective for tax years starting on or after January 1st, 2022. All right, that's it for the big California changes. Thanks for watching. Be sure to subscribe for the future updates of videos, and we'll see you soon.